Hi, Rudy Martin here. I'm editor of the Emerging Market Winners newsletter and an institutional money manager, here with a new way to cash in on the soft commodities boom. Cocoa prices shot higher on Monday after the internationally recognized leader of the Ivory Coast called for a one-month ban on exports. Now, cocoa prices had already rallied to their highest levels in more than 30 years, and a temporary halting of exports is bound to send prices even higher. The Ivory Coast exports about $2.5 billion worth of cocoa based on 2009 figures, roughly one-third of global supply. So what do you do now? My suggestion is buy an ETF that tracks cocoa. The IPATH, Dow Jones, UBS, Cocoa Total Return Subindex ETN. By the way, the ticker symbol for that is NIB. Now, I don't expect this cocoa shortage to disappear quickly for several reasons. One, it takes time to get new production online. Cocoa trees that are less than 5 years old will not produce seed pods. And peak production occurs when the tree is 10 years old. Two, current inventories are dropping. According to the International Cocoa Organization, the stocks to grinding ratio is the lowest it's been in years, aggravating the supply situation further. And three, chocolate demand continues to rise. The mature markets of Western Europe and the United States represent over 70% of world cocoa consumption. Although the volume of chocolate consumed has increased at only a low pace, the new trend in chocolate consumption is the increasing appeal of premium chocolates and in particular high cocoa content dark chocolate. Demand for chocolate is also rising in emerging markets. The increased standard of living in India and China is creating demand for chocolate bars, which used to be considered an elite luxury item. Chocolate consumption and demand in India and China have been increasing by 15 to 20% annually. And food prices in general are rising. The UN Food and Agriculture Organization talked of a food price shock with commodity prices approaching 2008 levels again. Now, some politicians are blaming financial speculators. For example, the French president wants to use his run at the G20 helm in 2011 to press for greater transparency in commodity markets trading and pricing and for tougher regulation of commodity derivatives. Now, the main force driving nominal commodity prices higher may be inflationary monetary policies at the U.S. Federal Reserve and central banks all over the world. If that's true, then any attempt to tackle the problem via more intervention and regulations is guaranteed to increase the risk of a food crisis. Overall, one of the worst commodity ETFs last year was cocoa, down 11.6%. But the situation is very different now. So, if you're looking for some comfort in this market, add cocoa to your next investment shopping trip. That's my take on it. Thanks for watching.